guys, welcome back. In today's video, we are talking about how shorts are going crazy, how the chart's screaming a squeeze, roaring kitty returning, and many more in this video. First, we're taking a look at this. This drives the criminal short funds and market makers crazy. Nobody has been willing to sell any AMC shares. They keep printing the public shares for cheap and everyone has been buying, willing to hold forever. AMC is never going bankrupt. The people are never selling. And so this is obviously reflecting to the OBV of AMC and taking a look at in terms of the investors for AMC. Now, we talked about this in the past. Essentially, a quick look is taking a look at 2021 when people started to buy into AMC, and we can see the OBV volume going up. And since then, it stayed at a very stagnant level. And so for those of you who don't know, essentially what this does is that it shows the people who originally bought into AMC have never actually sold their shares, or at least it hasn't gone to the institutions. And so this is why they are going crazy. This is why they are panicking and why they're desperate for any shares that they can get, because they understand that the retail haven't sold any of the real shares, and every time they keep printing these synthetic shares, the retail is buying it up. Like I always shown on this channel, every single day, every single week, there's always people that are buying into shares of AMC. It may not be a large amount at once. It may not be 1,000, 5,000 shares at once. But even then, when we're seeing people buying 10 shares constantly, and we have a large group of people continuously doing so, that's still very big buying power. And that is obviously costing these shorts everything, because for us it doesn't cost us any money to obviously hold on to the shares. The only money it will cost us is again the initial cost of buying into AMC. But for these shorts, it costs them money to finance the short positions, it costs them money to create new short positions, it costs them money to find all of these algorithms, all of these methods. It obviously costs them money when they create these synthetics, and so that's why they are worried about liquidity right now. And you can see in terms of why they pair it up with other ways, the fraction of a penny spooks again, like we often see with AMC and Fubo, and it's just any other. And so when you see a stock that isn't doing well in terms of the manipulation that's happening, in terms of when you look at how its fundamentals is supposed to reflect the price going up, the buyer sentiment is reflecting that people are buying and therefore the price should be going up, yet the price is going down. When you take a deeper look and into the level 2, into these data, what you will see is, of course, the constant spoofing. Of course, it's always by the same people, and they're doing that with the intent of suppressing the price down. And so just like we talked about with AMC here, just like why we said they're going crazy, is because whilst they try to push the price of AMC down, whether it's with spoofing, with tokenizations, they're doing it with the intent to create the incentive for people to sell their shares of AMC. But what they are worried about is that whilst the price is going down, no one's actually selling, but rather buying into AMC, and that's why they are panicking. You can also see this chart is straight up screaming, squeeze me. Short volume is 386% above average, nearly a million shorted on no volume. That's desperation, not strategy. They're trying to sell on the volcano of a paper umbrella and a meme detector. Dollar volume divergence, compression, and oh look, RSI plus MACD starting to curl like it's 2021 again, tick, tick, boom. And so what we're looking at is the graph for GME, and you can also pair that up with the RSI signals. And what we're seeing right now is from a technical analysis, when you take a look at the indicators, it's looking a lot like 2021. And obviously we all know what happened during 2021. And whilst this doesn't obviously 100% predict what's about to happen, what we can see is that if we compare it with previous data, we know that when we are seeing these sort of situations, we know what's happening in the market right now. And so we know, especially recently, how they're over leveraging. We see how they're trying to scramble for any sort of liquidity they can. We're seeing we're in a similar situation. Another big thing is obviously with the short volume above average. And one thing that we have been seeing for no matter if it's AMC or GME is, of course, the FTDs that's increasing. It's, of course, the FTD data that's not showing. And therefore, we understand that as we see these, secret and hidden FTD data, as we know that this indicates that they are, of course, trying to hide something. Last time we've seen it, we know what happened. And then when they try to hide the cat data. We also saw how they tried to obviously hide the FTDs. And so you know exactly what's happening right now, especially with what's going on. And so pair that up with everything we've just talked about, whether it's the technicals, whether it's the fundamentals, it's looking like a squeeze factor. Now, to top it off, to pair that up, what we have actually is the return of Roaring Kitty. So breaking news, Roaring Kitty is following 92 people again, which means he's being active on X recently. The cat is back and he's lurking. Now, what we have is understanding that Roaring Kitty has definitely been someone who's been very significant in this scene. Now, it isn't to say I'm saying that he is the person who will trigger the squeeze, but he's definitely someone who has had a lot of insight and obviously has seen and predicted many things. And every time we do see him return, we definitely see that volatility. We definitely see that volume going up. And one of the biggest things is understanding when short attacks something or someone, it means that they're scared of them. When we saw how shorts were trying to attack AMC for its fundamentals, for its business structures, we knew that because they were worried. And evidently, we saw that with how AMC's business structures were actually extremely good, and we saw how the fundamentals improve. And we've also seen how the institutions tried to attack Roaring Kitty. And so going off of that logic, it means that they're worried about Roaring Kitty as well. And it isn't surprised because we know how much shares Roaring Kitty has and how much options he also had. And we also talked about how if you were to exercise all of these options, it will of course cause a gamma squeeze. It will cause a dry up in the liquidity of these shares as he's forcing these market makers to obviously sell them his shares, or at the very least to locate these shares so he can actually buy. And so with him back, especially with GameStop earnings and everything that we just talked about recently, it isn't a surprise. And so what we can see potentially is, of course, the indication of something about to be happening, something that everyone is obviously what we have been waiting for. And, you know, this will be the first sign of many signs, because some of the things we got to look out for is, are shorts going to continuously lose money? Are they going to continuously close down some of the over leveraged positions? When you have all of these things that we've mentioned in the past and that they all pair up, that's when you know the squeeze will happen. And so you can already see so far we've talked about so many factors. Roaring Kitty coming back, the chart, the fundamentals, the spoofing that we've said in terms of showing the desperation, and talk about the OBV. These are all factors for why obviously we are seeing the closer and closer towards the squeeze. Furthermore, you can also see this. This is not price discovery. That's algo warfare in real time. Exact same bid/R spread, dozens of identical trade prints, 154 share odd lot smack in the middle like a glitch in the matrix. And what we can see here is, well, LTSE and DEX at it again, killing the trades and manipulating the price. GME is being attacked. And so this is obviously what we've talked about in the past. Now, one thing that you will know is, of course, multiple times you will see suppression on AMC and GME from the orders, whether it's orders that's being hidden, whether it's being longs being marked as shorts, shorts being marked as longs, whether it's your orders getting routed into the dark pool. These are all ways that obviously trying to suppress it. But the very fact that when they do this, when they are doing this, it means that they're worried about something, especially if we're seeing it at increase recently, and that's what we have been highlighting. And so again, like I said, I'm not surprised that Roaring Kitty is back when we have so many things that's happening. Now, we talked about one big thing in terms of we have all of these factors to do with AMC and GME. So we talked about the spoofing, we talked about Roaring Kitty, we talked about all of these real price discovery, we talked about the squeeze factors. But one big thing is the institutions themselves, the short sellers themselves. And it's about understanding where they are at. Well, when you take a look at the overall market, you can see the Federal Reserve has failed the American public for years, pumping endless liquidity into markets and to protect Wall Street while sacrificing the value of dollar. What was once monetary policy has become a tool to inflate asset prices at any cost. So one thing you have to note is that in the last few years, we've seen a massive injection of liquidity into the market, with the sole purpose of trying to save firms that were over leveraged so that they don't get bankrupted, so that they don't get margin called. Now, that itself saves companies. It saves short sellers, obviously. It saves these institutions. What it also saves is the market from crashing. However, that's only for the short term, because you have to understand that when they've created these mistakes and they get recovered because of the liquidity, it doesn't mean that the mistake is gone, because they are still extremely over leveraged. They still have these risks. It's just that now they have more margin to cover it. But once again, when it comes to that point, when they run out of margin again, what are they going to do? Are they going to create more money? Because that then just creates an even bigger problem, to the point where even creating money, even just printing money out of thin air and injecting into the market won't help them. And that's when all of these firms will corrupt and collapse. And that's when the squeeze will happen. Anyway, guys, thanks for watching. I'll catch you guys next time.